Welcome back, YouTube family. In today's episode, we're going to be talking about two of my favorite companies that I've been invested for a very long time. And these two companies I plan to hold for a very long time into the future. And there are a few reasons why. And we'll get into that in today's episode. And if I were to get in right now, which company I would be buying more of if it was my first time investing. And also we'll get into why I think that this is the case. Obviously on this channel, we're here to learn about financial education, we're here to invest in stocks, and most importantly, we're here to invest for the long term. So that's why we're gonna be talking about two big media giants that we all have heard of, and that is Disney versus Nintendo. So without further ado, I hope you guys are ready for all the cool stuff that I have planned. Let's jump right into today's video. Let's go. Welcome back, guys. Long time no see, but in all seriousness, let's really dive into these companies, right? Because you guys know Disney. You probably grew up with Disney. You probably grew up with Nintendo if you're a gamer at all, right? You grew up with these companies. You know what these companies are, and you might have even invested or thought about investing in these companies. And like I mentioned before, I have been invested for quite some time, so I'm very familiar with their products. And not just that, I've been a gamer and a watcher of both of these companies for a very long time. And I really enjoy all the products that they have in their catalog. And we'll get into that a little bit later. And we'll also compare the companies based off of their numbers, their valuations, their potential, their growth, all that in today's video. So stay tuned till the end. Make sure you smash that like button. Make sure you subscribe, because I mean, like, why wouldn't you subscribe? I mean, right? It's like crazy. I'm just kidding. But anyway, let's talk about this particular rivalry, because really that's what it comes down to. Let's look at Nintendo first, because this is very important, right? This is the Nintendo universe. This is what we're going to be talking about first. I want you guys to be familiarized with this, and then we'll talk about Disney, because I think separating them like this is going to give you more of a, like, okay, this is this company, this is this company, and then we'll kind of blend the two as we go into the numbers. So it's more of a side-by-side with comparison. So from Nintendo 64 to the Game Boy to the GameCube to the Wii, to the Switch, and now the best Nintendo games of all time. Like, look at this. We have The Legend of Zelda. I love this game, Breath of the Wild. Super Mario 64, Super Mario Bros. 3, Tetris, oh my gosh, Super Smash Bros. Ultimate, Super Mario. We got Mario Kart 8, The Legend of Zelda, and all these other games that you've probably not just heard of, but probably have played in your life. This is just some of the most popular games pretty much in history, right? This is what their franchise is all about. This is their bread and butter. This is where they make their money, the meat and potatoes, if you will. And I've played pretty much half of these games, right? I'm familiar with most of these games, and some of these games, like, for example, this one right here, I didn't even know was owned by Nintendo. I just assumed because, you know, it's Game Boy and stuff. But yeah, crazy stuff. So here we have Nintendo, right? Absolutely incredible company. Tons of potential for growth, right? These franchises probably aren't going anywhere, right? These franchises are going to grow up with us. We're going to hand that down to our kids. They're going to hand it out to their kids. And just like Disney, it's going to grow with us. And so here I'm going to talk about something that not a lot of people know about. And this is actually something that I was very unfamiliar with until very recently. And that is Super Nintendo World. I mean, what? Like, I mean, we've all been to, you know, Disneyland, or at least heard of Disneyland or Disney World. But what about Super Nintendo World, right? Kind of interesting, right? Kind of interesting. So this is Nintendo's Universal Studios in Japan. It is launched in Japan already. And in fact, they are actually planning to make one in California as well. Very interesting. So the United States will have one very soon. So when you visit California, you might want to just stop in instead of maybe go to Disneyland, or maybe you do both. But you might actually consider just going to Super Nintendo World, because it's a new kind of attraction, right? A new place to be. Very cool. I mean, look, you have the stairs here. I'm sure all of this is life-size, and I'm sure they're gonna have shops, rides, stuff like that. But that is just something to keep in mind, because when you look at these companies side by side, they have a lot more similarities than you might think. And so here's a little picture for you guys. This is what Super Mario World, you know, might look like, as far as, you know, these are obviously not real images. This is all photoshopped here. But here's another picture for you guys. You can see some people walking up and down, and then they're just hanging out here. They're all, I think, in masks. So this must have been an actual picture here. As you can see, Yoshi's Adventure, a lot of cool stuff. Honestly, I think this would be really fun. I think you ride in the Yoshis here. Yeah. So very, very interesting. I'd love to go, honestly. This makes me super excited. If I went here, I'd probably be acting like a kid, just like seeing his first ice cream cake or something. Just super exciting. But let's talk about Disney. Let's talk about Disney, because we got to compare the two, right? You can't not get Disney out of your head, right? Because this thing is huge. And we'll talk about that. I mean, like, look at this. We have Disneyland, right? Disney World. This is a great comparison to what, you know, Nintendo's just trying to build. This is like bulletproof, right? This isn't going anywhere. And then now we have the Disney cruises, right? This is huge, right? Right now during, you know, the pandemic and everything, they were shut down. That's why the revenue, and we'll get into that, the revenue has gone down a lot because they had to shut this down and they had to shut down Disneyland. But super interesting, right? This is a whole nother way that no one really is doing besides like Carnival, right? A company that's literally doing just cruise ships. Disney has their hand in pretty much everything. That's what I like about Disney. And so Disney, obviously, you guys know the franchise. This is, you know, Disney. They have the Star Wars. They have the Marvel. They have the National Geographic. They have all this cool stuff. And in fact, look at their character lineup. If you were to just to close your eyes, right? Just close your eyes and look at just like any corner. You would be like, oh yeah, I recognize that character. Oh yeah, I recognize that character. It's insane. It's like looking through a storybook, you know? This is like your childhood here. This is what dreams are made of. No, I'm just kidding. But so here we have the Star Wars movies. You guys are probably familiar with all those. They also own Hulu. They also own ESPN. So you guys probably know that. And also, I wanted to look at this because this is insane. So here we have, like, this is the company that Disney owns, okay? This is a map of the Walt Disney's worldwide assets. So here we have Marvel Entertainment in this corner over here. And you can just look at this. I'm not going to mention every single one, but you have Marvel Studios, right? This is all the Marvel stuff, Ironworks, MBL, Marvel Film. So, like, music, all that. So you have Fox Entertainment in this top right-hand corner, 20th Century Fox, which is, like, every movie, right? Fox Pictures, you have all that. Here you have some you might have not even heard of. National Geographic's in this corner as well. Hulu is in this corner, which they should be like its own bubble, but whatever. You have, you know, all these things on the side here. This is like companies that they own within this. Theatrical group, Disney Corporate, Disney Games, like crazy. Disney Parks, Experiences, Consumer Products. We talked about that a little bit here. ESPN, which, you know, again, it definitely deserves its own section here. ESPN Events. We have ESPN on ABC, which is, I guess, its own thing. So here we have, I don't know why they put Hulu in here twice, but oh, right here, Disney Direct to Consumer and International. So this is just like their international brand. So they have all of that. They own what seemingly almost too much, right? Like, I mean, if I were to look at this and I was like a government agency, I'd be like, Disney, you're a conglomerate. You're a monopoly. We're going to have to shut you down. At least share, you know, at least share with your partners. But I think that's what we're getting to. I think that's what Nintendo is intended to be, right? And not really by the government's choice, of course, but really by their own will. So here we have the Nintendo stock price. This is where we get nitty and gritty, okay, guys? You guys made it this far. Congratulations, because this is where it gets like juicy, and you're really going to understand which one, not just I think is going to be juicier, but I want you to decide for yourself, and then I'll talk about kind of what I think. So let's look at this from, you know, just like, hey, I don't know who's going to do better, whatever, right? You can look at their stock prices, right? So let's compare that for just a second here. So obviously 191, that doesn't tell us anything, and 71, that doesn't really tell us anything. What you want to look at here are the market caps. Market cap of Disney is 346 billion. So we'll just round that up, 350 billion, okay? So the market cap doesn't show up for Nintendo here, but if I were to just like magically poof it up on the screen for you guys, that is their market cap. And it's actually $68.8 billion. Just from the top of my head, I'm just kidding. No, I looked it up. But it always shows up as like $1 trillion in yen, and you have to convert it. So just remember 68.8 is roughly what it is as I'm making this video. So very, very different, right? Very different in market cap. 350 to, you know, 70. Let's just round up to 70. That's a big difference. That means, you know, Nintendo is a much smaller company, roughly 5 times smaller than Disney, right? And honestly, I think they have a lot of room to grow. But let's talk about their numbers, right? This is their financial performance. So here we have the year of 2019, 2020, and we'll just look at these three, really 2018 to 2020. We can look at the quarterlies, but I don't think it's like 100% valuable right now, because like if we took a look at Disney's, they just got slaughtered for 3 quarters in a row. And you'll see that even in the yearly, but you can at least get an idea of their year-to-year change by looking, you know, at the percentage, right? So you can say, okay, 1.06 trillion, they went up 115% from 2017. Then their growth rate slowed down a little bit, 13%. Obviously, their net income still went up decently, 40%, that's good. From 2019 to 2020, on the other hand, they went up 9%, so not as much in revenue, but roughly about the same in net income. That means they're growing heavily. That means they're able to turn that revenue, even though they're not growing as much in revenue, they're able to turn that revenue still into net income. That's good. The more net income you have, the more money you actually keep at the end of the day, right? Obviously, the more taxes you pay. So Walt Disney Company, here we go. Again, this is why I don't want to look at the quarterly, because look at the quarterly, look at quarter 2, quarter 3, quarter 4, they just got eaten up. And quarter 1 doesn't look that pretty either. So annual is what we're going to be looking at. And as you can see, 2018 for comparison went up 7%. Disney is a conglomerate. We know that it's not going to be as fast growing as, Nintendo, of course. But 7% is pretty good for Disney, and net income has also gone up 40%. 2019 was a little bit sloppier. Their revenue is 17%, but their net income went negative 12%. And as you might have guessed it, we got the little pandemic going on over here, and that revenue went down 6%, and the net income, 125%. Oh, that's their park shutting down. That's their cruise lines shutting down. That's a lot of things just going wrong for Disney. And lucky for them, they did launch their Disney Plus during this time, so they were able to recoup some of that, but I'm sure there was a lot of money spending, advertising that went into that. I think in 2021, we're going to see a correction, but that's what's really interesting about Disney. If you look at their price, right? If we look at their price for the last year, right? Even though they were doing terribly, right, on the financials, their price went up and up and up, which I don't know if that's a good sign, right? That's not necessarily good. I mean, obviously people are pricing in the future results, right? They're pricing in the pandemic. They're pricing in a lot of things that went wrong. And they're saying, hey, it's not going to happen next year. But that doesn't always mean that it's going to continue. If anything, that might just show us a correction that is coming for what their financials actually look like, even though their future does look bright. So, Nintendo Online membership prices. I just want to look at this because even though we know that Disney Plus has their own membership plan, and I know it doesn't sound like a lot, you're going to see the figures here, but it is a lot of money when you break it down. So, Nintendo Switch Online ranges price from $3.99 or $7.99 or $19.99 for a whole year. Obviously, this is like the cheapest plan, but most people just opt in for this. And actually, a lot of families just opt in for this because the family plan, you're going to be saving a lot of money, right? Especially if you have 3-4 accounts. So if you have like a spouse, that's already 2 accounts, it's already saving you money. And then if you have kids, it's saving you a lot of money. But that is a good sign for them because not only do they have to pay for games, but they also have to pay for this. This is a very, very similar model to what Disney is trying to do with their Disney Plus platform. You pay for a month, right? Or you pay for the year, but then also from time to time, they're going to release a movie that you're going to want to buy. And so that's what's really interesting is Nintendo has actually structured this really, really well, and they can just increase this price as time goes on, right? Right now it's $3.99, but next month it could be $4.99. A year from then, it could be $5.99, right? And they can just keep increasing that price. And that's what Disney plans to do with their Disney Stream, which is $6.99 per month or $69 per year. I think it's a little bit expensive, but there's ways that you can get this for free. Certain providers for like phone plans can give you free Disney. Sometimes they also run promotions. Like, so if you pay for Disney, you also get Hulu. And on top of that, maybe you'll get like Spotify. So they have these kind of deals that are going on from time to time that you can really snag up a decent priced Disney Plus streaming, but most people share it with their family. So they're not making here, they're not making $6.99 per user. Sometimes they're making $6.99 for every family. Here, on the other hand, you kind of need to pay $3.99 per user because I don't want to share my data. Like, I don't want you to play on my Zelda game or my Mario game, right? I'm gonna take the cost of $3.99. You're going to take the cost of $3.99, right? So it's not that bad, but also in the long run, I think Nintendo has more potential here at the way that they structured it and the way that the gaming systems work. But that doesn't necessarily mean that Disney can't just rack up this price as cable companies go away. Who owns the cable companies? Disney. So anyway, it's official. The Super Mario movie is set for 2022. Whoa. So Disney versus Nintendo in the movie scene. No, but not really. Obviously, Disney is like a conglomerate in this space. Nintendo's just releasing little bits of movies here and there, just like they did with Sonic the Hedgehog. Now that it looks like they're planning the Super Mario movie, I'm sure that they do like a Zelda series would do really well if they can get the right actors involved. But super interesting though, right? Because even though, hey, they're not leading that space, maybe their game space is the movie space for Disney. In comparison, Nintendo games, Disney movies. And now that Nintendo might be getting into parks, right? Like fun recreational parks, well, Disney owns that space. But that doesn't mean there might be a crossover and like a little bit of competition coming in Same thing with the movie section. I don't think that Nintendo has the capability to compete with Disney, especially not right now. Like, this is like 10, 20, 30, 50 years out, but it doesn't mean that they're not trying. That's a big step in the right direction, because if they want to even compete with Disney on even like on a micro scale, they need to start, right? That's important. So this will be interesting. I'd be curious to see it. Again, I don't know if it's going to be good. I honestly didn't even see the Sonic movie. I did see Pikachu, which I thought was absolutely fantastic. Let's talk about some numbers. So here we go. This is just a Snowflake Analysis wheel. I don't like to always look at this, but this is just something that if you were to like quickly glance at, you'd kind of have an idea of what their future or current status is as far as a company goes. But here we have PE ratio 17 times is actually below the JP market, which is 18 times, and earnings grew by 97% over the past year. And remember, their net income profitable. Anyway, so here we have Walt Disney, same thing. You have their wheel here. Earnings are forecast to grow 38% per year. Really good. And interest payments are not well covered by earnings, and significant insider selling over the past 3 months. For a big company, I don't know if that looks entirely good, but I mean, CEOs, CFOs like to take some profits, so I can't blame them. So anyway, next we have here, this is Nintendo's debt level. As you can see, completely green. This is good. I love to see green. And honestly, we all love to see green. We should love to see green because green equals no debt. If you saw red here, which you'll see with Disney, you'd be like, I don't know, this is a good sign for a growth company, right? This is a good sign. Honestly, that means they have a lot of cash to burn. They could build debt, right? If they want to really expand parks or whatever. Honestly, for them to be even able to build a second park using all their own capital is incredible. That would be insane to see. If they're able to build that park and they didn't have to put any money down, then I would say, okay, they can literally disrupt, TV, because they could just be throwing their cash in there. And honestly, Disney doesn't have a lot of competition right now. They own the space. Maybe Netflix, okay. Maybe Amazon, definitely not right now. But who knows? Nintendo might just like jab, jab, right hook. And here we have another company competing directly with Disney. I don't know. We'll see. But anyway, here's the balance sheet for Disney, long-term physical assets. Obviously, they have a lot more money, right? They have a lot more equity, but they also have a bunch of debt, $54 billion of debt. I wish it broke it down here, and maybe this is something for Simply Wall Street, but if they could break it down to like long-term or short-term debt, that would be really useful. I think more people would use this software if it was broken down like that. So there you have an idea of their balance sheet. All right, so next, look at the dividend, right? So this is Nintendo's dividend. 3.01%. Now, I'm not like a huge dividend guy, right? I've tried that route, right? And then I put like, maybe 5 figures or so into dividends. And I was like, okay, this is good, right? Like felt good collecting those dividends. But then I was looking at my growth companies and I'm like, these things are growing much faster. I'm way better at picking stocks. Why don't I put some capital over here? And as I put more money into these companies for my dividends, I'm like, okay, this doesn't make any sense. Let me just put most of it in here. And I still hold some dividend stocks. For those of you who follow the channel and, have been long-term followers, I do invest into like MJ, for example, right? And when I buy it, I buy the ETF because not only does it have low PE ratios, it's diversified, the whole entire industry is doing well, but in fact, it pays a really hefty dividend. And same thing with like REITs, and like Johnson & Johnson, like Coca-Cola, like those companies, they all pay dividends. I'm not going to complain, right? And that's the same thing here. Like, we know that dividends are okay and they're nice to get, but really, this is just a little cherry on top because I think Nintendo's more of a growth play. Like, I'm investing into Nintendo thinking, okay, they're growing heavily. They are disrupting industries. They're competing with these giants, right? They're slowly competing with Disney, which is like literally the media giant of the world. And they pay a dividend, like, sweet, I'm not going to complain. And in comparison, right, if you guys are wondering, well, doesn't Disney pay a dividend? Yes, they do pay a dividend. So I can't hate on Disney. I love Disney as a company. I'm still invested in them. Not as much as Nintendo. That's just, just for you guys to know. And so here we have Disney's dividend. Not bad, right? For a big company. I mean, they're paying like 1%. They're paying more than the banks, okay? Let's just put it that way. Like, you putting your money in Disney is probably better than putting your money in the banks. The banks pay like 0.1%, right? So at least Disney's paying 0.8. So they're paying like a multiple of 8 times what the banks pay if you just had your money sitting in cash. Obviously, Disney also had growth over the last few years and really since like forever. And so you have growth and you have a small dividend. I wouldn't say this is like good. Obviously, this is like 3.5 times smaller than, what Nintendo pays, but at least it's there. And the problem is they actually don't always pay their dividends. I mean, Nintendo doesn't either, I should say, but they have more likelihood that they will because they have enough cash sitting around that they could pay their dividend, right? They want to pay their dividend. Disney, on the other hand, something like the pandemic happens, you can't pay their dividend. Investors get a little worried, they sell out of their stock, and it doesn't look good on Disney's part. So, do I look at Disney as like, hey, I'm going to invest for the dividend? Absolutely not. Do I look at Nintendo for that? Absolutely not. But what would I buy? Personally, what would I place my bet on? If I was given, right, this is not investment advice, but for me, right, if you gave me $1,000, if you gave me $10,000, like if I had to pick Disney or if I had to pick Nintendo, which one would I pick? Well, obviously you guys probably know the answer to that. I would obviously pick Nintendo. But that doesn't mean I wouldn't want to be diversified in Disney. Disney has the cruise lines. Disney has the ownership, really the dominance of the media, right? Just because Nintendo is crushing it, that doesn't mean I wouldn't want to invest in Disney. And you can kind of see why that is. They're the conglomerate. But I think if you were to like say, hey, what do you think has the most amount of growth potential in the next 5, 10, 15, 20 years? Well, I think Disney will probably 3x. Maybe you'll even 4x. It'll probably become a $1 trillion company. But I think Nintendo will much more likely become a $500 billion company, which if you took a comparative look at valuations and the multiples of what that would look like, Nintendo's going to grow a lot more. Again, not financial advice, but your dollar amount might just be better used in Nintendo. Personally, that's where I'm putting my money. Take this with a grain of salt. I'm just a YouTuber, right? I'm just a guy on the internet. Don't listen to just what I'm saying. Do your own research. That's what I always preach. Do your own research. Make sure you look at different views, have different perspectives, have your own opinion. Make sure you do the due diligence to understand both companies. This is just the deep dive that I've created, right? There's a bunch of other factors that you guys can look at. But overall, this is why I like Nintendo. This is my opinion. Hopefully you guys got a ton of value from this. If you did, please smash the like button if you haven't already. It needs to be blue, not gray. Blue, not gray. Blue, not gray. Blue. And also, if you don't mind, smash the subscribe button if you haven't already. So if it's red, you want it to be gray. Not red, gray. Is that confusing? Anyway, hopefully you guys got a lot of value. Thank you all so much for watching. Thank you again for tuning in to today's episode. I know it's a little bit of a longer one, but I appreciate each and every single one of you. Much love. I'll see you guys in the next one. Peace out. Bye.